by the fire. My name is Sean Scallon, one of the managing partners of Navigare Capital Partners. It's got my great privilege to introduce one of our advisory board members today, Graeme Bibby, CIO of Partners Wealth Group, to have a chat to Henrik Ramskov of Navigare Capital around their shipping fund. So without further ado, over to you, Graeme.
Well, Henrik, nice to speak to you today again. And, it'd be good to kick off with a bit of the background of the history and heritage of Navigare, and why did you, as a firm, enter this particular investing space, and a little bit about the founding partners.
Sure, great. Well, thanks for having me, Graeme, and good to see you again. So, so the background for starting Navigare Capital and establishing the Maritime Investment Fund universe, if you will, was essentially an extension of the about 20 years I spent in the stock-listed Danish shipping firm A.P. Møller-Mærsk. As part of that, the idea was formed to establish a offering to institutional-minded investors, so institutional investors like pension funds, insurance companies, and family offices who would like to have another aspect into their portfolio of financial assets. So the idea and the premise for establishing the fund was to invest into commercial vessels, i.e. ships that are carrying some kind of a product or commodity, shipping being a very global business, and through that provide diversification. So the business model is really that the fund invests into commercial vessels. The fund will then lease those out to customers that are typically shipping companies, trading companies, energy companies. And I then formed the company with the backing of the current chairman of A.P. Møller-Mærsk, and also the CEO of A.P. Møller Holding, who is the grandson of the founder, Mærsk, so Robert Mærsk Uggla. So he is very much behind Navigare Capital, also as an investor. And then I formed the company with three other senior executives who have long-standing careers in different parts of the maritime space and the maritime financing space.
That sounds really interesting. Important to know, where strategies and teams have come from. The global shipping industry as a sector, and financing that sector is interesting. So why did you choose that? And you've chosen a particular way to go about that within the sector. Could you explain a little bit about that?
Sure. So, if you look at the shipping sector, being probably one of the most global industries there is, 2/3 of our planet is covered by water, so commodities and minerals are where they are, so they need to be transported, and transporting products and commodities by a vessel is by far the most economic and also the most environmental friendly way of transporting goods. The industry and the asset class, if you will, is also one with a high degree of liquidity. It typically has liquidity similar or higher than a normal commercial real estate market. There are some 60,000 plus commercial vessels worldwide. There's very good visibility and transparency into how the pricing of those assets, as well as the pricing of the contracts, we call them time charter when we lease out the ships. We have chosen to position ourselves in the value chain as what we in shipping call a tonnage provider. So for people who are familiar with aircraft leasing, that would be the equivalent of leasing out to Qantas, as an example. And the benefit of being a tonnage provider is that we are not depending on the utilization of the ships. We get paid a fixed fee per day. Typically, shipping is a dollar economy, so a fixed fee per day, 7 days a week, 1 month paid in advance. We are not dependent on or negatively impacted on whether the vessel is sailing fast or slow, utilized high or low, as I mentioned, the oil price for fuel. So from an income perspective, and consequently our ability to pay out dividend on a consistent level and a double-digit level, that is very much an important part of being where we are in the value chain.
So that's really good about explaining what it is and how you go about it. Investors might be thinking about the impact of global supply chains, then shifting, impact of tariffs, and so forth. How does your strategy mitigate some of those risks and changing tariff and global trade dynamics?
No, that's a very good point, and obviously highly relevant these days. So we obviously saw the first in that when Trump was president in the first time around, there was tariffs. Those tariffs were kept by the Biden administration. So in some ways, without being too philosophical about it, you will see that trade will find a way. So trade will find new ways of transporting goods, because as long as the demand is there, and the demand is there, we still see world trade growing. Also during the current Trump administration, it might grow to different directions. You see China and many of the Asian countries establishing new trade lanes. You see product going through South America, the EU doing trade deals. So actually what typically happens is that you will see trade become more dispersed. And for somebody like us, that's typically a good thing, because that means you typically have to travel the same amount of goods, not even assuming an increase, but for longer distances. So this is what we call longer ton mile, and consequently that is driving up demand. And because we invest across a multitude of different shipping segments that have underlying demand drivers that are distinctly different, then not only do you have a low correlation between the different shipping segments, but as a financial investor, this would also be low correlation to your other assets, financial assets that you would be invested in. So actually, the tariffs, although tariffs we don't think is a good idea, trade will find a way, if you will.
Yeah, so that's really great on all the fundamentals about how you're going about it and the industry structure and influences. You've got funds 1, 2, and 3 in the series. How are they tracking to date to your strategy and performance expectations?
So we closed our first fund last year. We sold our last asset in Q4 last year. So we have a target of 15% net, and we did 18% on the first fund. Our second fund is tracking well above that. The second fund is a year into its realization period. We sold about half of the assets in that, so tracking very well. Fund number 3, we just had closing last week, and above our target. So this is by far our biggest fund. We already invested about a third of the investable capital in that fund, with some very strong underlying yields with long contracts, so investors can already see what kind of yield that they would be anticipating in the coming period. So we're quite pleased with the performance, and perhaps most of all, very pleased with the fact that we have been able to generate and pay out dividend on a quarterly basis since all the fund's inception, including during COVID.
So, given the fund's characteristics, and I guess it's mostly it's a lending strategy, but it does have some bit of capital gain there as well. How would you think about how this would be positioned within a multi-asset portfolio given the fund's characteristics?
So I think the way that an investor could look on us is that it would be an additional element to their portfolio. It would be an element that holds different characteristics, i.e. this would not have a correlation or high correlation, if any, to other investments they may invest in, be that stocks or bonds or real estate or other infrastructure, as examples. So as an investor, I think they can view this as an element of furthering their diversification of their multi-asset portfolio. They should also view this as a yield generating aspect. So as an investor, you do not have to wait until the end of the fund's life. Of course, yes, there is some capital gains that can be had, but you would see funds flowing back to you in the form of dividends, which we so far have done on a quarterly basis.
That's really good. Thanks, Henrik. So if investors are interested in learning more about this opportunity, please speak to the Kingsgate Capital team. And thanks very much, Henrik, for your time today.
Thank you. Pleasure.